Hi, thanks for joining me. Today we'll be discussing the third principle in the book, 7 Timeless Principles of Investing. And that principle is, it's not what you own, it's when. And forgive all of you Vince Lombardi fans who knew that he said the same thing about winning, but really the most important decision is when you own something. And I can give examples. If you look at the last 50 years and you were investing in the Dow Jones Industrial Average and you missed the 10 worst days of the Dow Jones Industrial Average, your returns would have been more than double had you had those days in your portfolio. And on the other hand, if you missed the 10 best days, you would have only had half the return if you'd been invested in all days. So timing really is important. Now, we're not suggesting anyone can time it to the day. That's certainly not our approach. But we think there are a couple very important things when it comes to when you invest and how you go about that. And the three things that we would say that you would look at is when do you buy, how long do you hold, and when do you sell. Now, when it comes to when do you buy a stock, you may just be a person that wants to buy and hold a stock forever and a day, and that's okay. But you really need to consider what is a minimum time frame that you'll hold a stock before you would turn around and sell it. You have to give the company time to do what you bought it to do. And then you would try to figure out what is an optimal holding period after you make that initial purchase. And there's a lot of ways that you can decide what you'll use as criteria to make your purchase decision, but it needs to be based on timing. Now, how long do you hold it? And one of the things that, if I look back in time at Qualcomm, for instance, in 1999, the stock was up 22,000%. The next year it was down 60%. And again, you can see that the timing of the purchase would have been very, very important in terms of how you approach investing and knowing when to hold it and when to sell it. So as you look at it, it's critical that you decide ahead of time whether you're going to use a strict buy and hold approach, and just letting it sit in your portfolio forever and a day, or if you're going to have a set of criteria from the earnings, from valuations, from other criteria such as what's going on in the economy that will drive your decision. But you need to have a discipline. And the last is really, when do you sell an investment? And of all the three, that is the most important. We actually did a research study where we would buy stocks randomly in a test portfolio and then sell them using a very stringent sell discipline. And we would outperform the market with that. Now, I'm not suggesting that's the way we do it or anybody do it that way, but when you sell is the most important decision. So you need to go in with a preconceived plan of what will drive you to make the decision to sell your stock. And when you look at that, you should say to yourself, what would affect the stock over, say, the next 12 months where it wouldn't perform in a way that you would want it to perform? You may determine a different time frame, but that's one of the ways that we approach it. The bottom line, it doesn't matter what you own if you don't own it at the right time. And so that's why it's really important to have a good timing approach when it comes to investing.